Hello everyone, welcome to this higher time frame outlook for NQ and ES. First of all, let's start with the monthly time frame and let's break down this price action that we've got. Looking at the monthly time frame, we can see that we've had this strong expansion leg or this expansion profile both on NQ and ES. And with this leg or with this move, both NQ and ES formed its all-time highs. Now, based on market profiles, we know that after price makes a significant expansion or after price makes an expansion profile, the next likely profile that we can expect is either a consolidation profile or a ranging profile or a retracement profile. And given where we are right now, a retracement profile here makes the most sense because we've made all-time highs on both NQ and ES, right? But of course, you can't just assume a retracement profile or you can't assume that a retracement is coming without a supporting factor, right? You need actual factors and evidence before building a narrative. And the supporting factor for this retracement profile that I'm expecting came from an SMT divergence between NQ and ES. Now you won't see this divergence on these contract adjusted charts, but if we switch to the real historical unadjusted charts, it becomes clear. What happened is that NQ failed to take out this high, right? We are currently looking at the unadjusted charts or the non-adjusted charts, right? This is basically showing us the data with the actual gaps. So you can see what happened is that NQ failed to take out this high, this previous high, whereas on the other hand, you can see that EUs took out this high, right? Which means that we have non-symmetry in price, right? This divergence created non-symmetry in price action between these two correlated assets, right? And this kind of misalignment and this divergence led to this retracement profile on the higher time frame. This was a supporting factor behind this higher time frame retracement profile, right? And you can see that that's exactly what we are seeing right now, right? Now let's get back to the adjusted charts and let's analyze this price action again, right? So you can see that based on the non-adjusted charts, we had the SMT divergence, which was like a major factor which led to this retracement profile. Now the next question is, where could this retracement go? Meaning where this retracement profile could potentially end, both on NQ and ES. And to answer that, we need to first of all look at the dealing ranges on both assets, right? We need to break down the dealing range of this expansion leg, and we're going to identify the corresponding discount and premium key levels within the dealing range, right? That's what we're going to do. If we analyze this dealing range, we can see that price is currently inside the premium region, right? So typically, to rebalance the dealing range, price will tend to move towards the discount region or at least to the equilibrium region of this dealing range, right? But obviously, we're not going to jump ahead of ourselves or force any buys just yet, right? Before assuming anything, we need to first identify the correct key levels inside this dealing range that are actually relevant to us. And right here, we can see that within the premium region of this dealing range, we have a low, this low, both on NQ and ES, right? We've got this premium low both on NQ and ES. So the first liquidity target or the first point of interest or the first drawn liquidity would be this premium low inside this dealing range, right? That's our first point of target that we are looking at for price to retrace lower to where this retracement profile could potentially end or where this retracement profile could potentially go to, right? This is what we are currently looking at. To sum it up, my anticipation or my expectation for price is to have a retracement profile both on NQ and ES, and my drawn liquidity for that retracement profile is this premium low on NQ and this low on ES, right? But this is just the higher time frame analysis, right? This is the higher time frame long-term drawn liquidity. Now let's drop down to the weekly time frame and let's see if there's any short-term drawn liquidity that could potentially give us a conflicting view, or maybe it adds more confluence to this existing bias that we have on the monthly time frame. Let's look at the weekly time frame. Looking at the weekly time frame both on NQ and ES, if we look at the non-adjusted charts, first of all, we can see that we have the same SMT divergence that we saw on the monthly, right? But you can see it's playing out in a more refined way on the weekly time frame. We've got this SMT divergence on NQ and ES, right? And this SMT divergence led to this reversal on the lower time frame, or this retracement on the higher time frame. Now, the next thing is that we've got this micro dealing range on NQ and this macro dealing range on ES. And if we break down these micro dealing ranges both on NQ and ES, we get an even clearer picture. First off, we have this low on NQ, right? And this low is sitting inside the discount region of this micro dealing range, right? We've got this low on NQ and this low is inside the discount region. And this low could potentially act as our refined drawn liquidity on the weekly time frame, right? On the monthly time frame, our long-term drawn liquidity is these equal lows right here, but on the weekly time frame, our refined drawn liquidity would potentially be, first of all, this discount low. But here's where things get interesting, because when we zoom in, right, let me remove this. If we zoom into this price action both on the NQ and ES charts, we can see that this low right here that we've got, this corresponding low is inside the premium region, but not only that, it's already taken out or it's already reached on the ES chart. However, on NQ, we haven't taken out that low yet, which means that now we have a bullish SMT divergence between NQ and ES. So now the big question is that, is this divergence strong enough to push price straight back up and make a new all-time high, right? Is this divergence strong enough that it completely invalidates our long-term narrative, right? That's the question. And the short answer is no. The higher time frame dealing range and the higher time frame market narrative that we had are still much stronger than this short-term divergence on the weekly time frame. But what this divergence can do is that it can cause a retracement higher on the lower time frame on NQ and ES before we eventually move lower and take out this liquidity target, and eventually these equal lows on the multi time frame. Here's what I mean. Since ES already, let me zoom in. Since ES already took out its low, but NQ failed to do so, that creates a short-term bullish divergence. And at the same time, we can see that on NQ, we have this weekly fair value gap sitting right above, while ES has this volume imbalance and then this fair value gap. And because of this divergence, I expect price to first of all retrace higher and test this weekly FVG and this weekly volume imbalance both on NQ and ES. And once it fills this fair value gap or tests it, I then expect price to continue pushing lower towards the main drawn liquidity, which is this low and then eventually these lows, right? Because of this divergence, I expect price to retrace higher on both on NQ and ES to test these key levels, and then from there I expect an expansion lower towards the actual drawn liquidity, right? So in summary, the weekly market context and narrative suggests that price is likely to push higher first of all to fill these efficiencies, these imbalances, and then resume or continue its move lower, right? This is what I'm expecting. Now, let's move over to the daily time frame and let's see if we can refine or support this existing buy zone narrative that we've got on NQ and ES. Okay, so first of all, we can see that we have the SMT divergence, and then right here we've got the weekly key levels. This is the weekly volume imbalance on ES, and then we've got this weekly fair value gap on NQ. And because of this divergence that we have, because of this divergence, I expect price to retrace higher, right? To push higher to fill this fair value gap, and then from there I'm gonna look for bearish confirmations on the lower time frame and then expect an expansion lower. Right here, along with that, you can also see that we've got this candle range. What you can see is that price failed to close below this candle range low, right? We had two opportunities to close below it, but we couldn't. The first time we had a divergence after we purged this candle range, then we came down lower, we formed a failure swing here, but we couldn't close below it, which meant that the bearish momentum is not that strong and we can expect some potential bullish momentum. And then once we're there, I'm then going to look for a CSD or a market structure shift on the 4-hour time frame. And once we have that, then from there we can expect an expansion lower, both on NQ and ES. Right? This is what I'm expecting.